Hello, my name's Gary Shotton, and today I'm going to talk about community saving groups or community saving banks. This is what we found out that's happening in a lot of the developing nations, and I'm very excited about it. And also specifically in East Africa and a lot of Africa and other parts of the world. You see, the two biggest questions that come to us as a problem with owning and operating a business, and the two things that will cause a business to go bankrupt or become insolvent, are the lack of capital, the lack of getting the money a person needs to grow to the next level. Now, if you've listened to me very long, I'm the one that suggests on the very first business, you don't borrow from anybody, but you produce some kind of effort with the things that you can do without borrowing. But I also know that that's pretty hard for some people to do. But don't borrow very much money and prove your skill sets. That's what's necessary. And now, so the problems are the capital to start or grow, and then also the reality that life happens and there's emergencies like a severe sickness or a major issue with a vehicle or things that just can drain a personal side of their lifestyle, and there's no money to fix that, and the money's pulled out of the business, and there we go. Cash is like blood. Blood is important to the body. Cash is important to the business. And so what we understand is that community groups, and we've seen some wonderful ones formed, and it's nothing that we do to cause this because it's well understood in these countries, that people can gather weekly, typically, and every time they come, they bring some money. And when they bring the money, they put it in to basically the pool, the revenues that the group has under their control. But that same day, they loan it out as like loan officers to people that have one of those two cases. The case of an emergency that they need to borrow for a bit of time, a sum of money to fix their car, or for a bit of time, a sum of money to help with somebody that had a funeral or something unexpected. And so they can borrow the money from that group, from that fund, and then they're responsible to pay it back. Guess what? They do pay it back on a regular basis. Guess what? If money comes from outside the country, from a foreign entity, from people that have money, I've been told, and believe it to be true, that it's very hard for that money to get paid back to the fund, because the general attitude in general is that the people that actually presented that money really don't need it back. Now, the other thing is, of course, the funds are gathered every week, and they're increasing, and the people that are bringing their monies to this fund are knowing that they have a given interest rate. They're making an interest, a fair interest rate on their monies. And the other thing that people can present is like requests for a loan for their business. Well, who's the loan officer? Who decides? The whole group decides. And now those loans are typically regularly paid back, because this is the lifeline for people in their community. This is their friends and neighbors, and they know that they can't cut that last lifeline. The one chance to have help, they've got to be honest, and they want to be honest, so they're more diligent in paying it back. Now, the reality is that we have to overcome these two issues. And the groups seem to have a very, very good policy that at the end of 1 year, that group then has decided to dissolve and resolve all loans and pay everyone back their money. I don't know how they do it, because I don't think they use computers. So this is all done by hand in some way. In other words, people bringing small sums of money every week, and somehow someone's calculating the interest that they're due at the end of that period. But we have seen groups that had started with just a couple $100 and now have $6,000 in their fund in less than 7 or 8 months. That's amazing. Now keep in mind, there's not 6,000 or 7,000 sitting in a bag that they have to be careful that no one steals it. Every time they arrive and every time the money comes, as I understand it, it's now there's a list of people that have requested funding, and those people that requested funding are given under a procedure the monies that they're willing to pay interest. So people are depositing monies receiving interest, and others are borrowing money, paying interest, and this is a functioning form of a bank. I think this is fabulous because it solves two major problems. And maybe the third problem is that there's a tendency and a culture that if someone has a need, they would come to an individual and say, I have such a need, and that individual is pressured to give them money. Pressured to give them money out of their business, out of their personal funds, and this is not fair to be pressured like that. And so that person that's being pressured, I suggest, would advise the person that asked for the money to get involved with a community savings group. Now they have an answer for that issue. And they say they don't want to get involved with it. Well, tough. Maybe you have to say, no, I can't loan you the money. Well, I hope this is helpful. We're here to help you. Thanks for being a part of Inspiring Better Business.